What's up guys, welcome back to the next lesson. So in this lesson we're going to be tackling the basic concepts of the creditors and credit purchases. So we're going to be doing the definitions, we're going to be doing why do they call it creditors, we're going to be doing how the credit procedure works, how do we record it. Oh, and just by the way, I hope you guys have something warm to drink or a coffee. So yes, let's get into it. So the first question we're going to be asking ourselves is, why does the business need credit purchases? If we examine a business, every day it costs us something to operate the business. So it will either be our electricity, the salaries, the water, Wi-Fi, your telephone, all of this will be included in your operating expenses every month. And this is exactly the reason why we need to buy stuff on credit, because cash is king within a business, which means that cash is so important that if a business doesn't have enough cash, then it can't sustain itself and then it can't operate. And what happens if the business can't operate? Then the business ceases to exist. So that is one of the biggest reasons we need cash within a business. Before I explain any further, I need to first explain to you what a credit purchase is. Let me give you guys a good example of this. We sell mice, okay? I don't know if that's the correct plural for it, but we sell mice, okay? Not the animal, mouse, okay? And every month we need to go buy a lot of stock of this to be able to sell it and to make a profit, because that's what a business does. It buys and sells goods. Okay, in order for us to buy this, we need to have cash. But what if we don't have enough cash? What if we only have enough cash to operate this month and to pay our monthly expenses? That is when we go to a supplier of ours. So let's go to John, who sells these mice, and we go and ask him, listen, do you have a contract for me? Can I perhaps get this stock and sell it and only pay you back later? So can I get it now and then pay you back later once I've sold it? And that is basically what a credit purchase is. It's an agreement between the supplier and your business where you agree that you get this from them, the trading stock, and you will either pay them back within 30 days, 60 days, 90 days, or even 120 days. It depends on how you negotiate. And this is where we go to the section where we ask ourselves, what is the definition of a creditor? It's suppliers and people to whom the business owes money. So John, who we just spoke about earlier, we owe him money. So therefore, he is our creditor. If we get a bit more specific, we have a trade creditor. But this term isn't used as much, and you won't really be asked about this in your exams. A trade creditor is specifically what you call someone that you buy trading stock from. So when you buy from John, you call him a trade creditor. Creditors Control is the name of the account in the general ledger. This account is within the B accounts, which means it's in the balance sheet account section. What type of account is Creditors Control? This is a bit more advanced, but it is a liability account because us as the business owe someone else money. And where do we record all of our creditors, all of the people, like for example John, that we buy our stock from? We record them in the creditors ledger. The definition of a creditors ledger is every individual creditor has a creditors ledger account. The statement, which is how much the business owes, is determined by this account. So this is how we see how much we owe and to whom we owe money. Okay, so next it's important to look at what is the process when we want to buy something on credit. The creditors journal is very much alike the CPJ that you guys did last year. And this works is that we buy something, we go and buy this from John, okay, and we get a receipt. And then this receipt is obviously the source document, which is recorded in the CPJ. But when we buy something on credit, in other words, we owe someone money and we get the stock immediately, they give us an original credit invoice as the receipt of the transaction, as our proof of payment. And then from there, we record it in the creditors journal. So this is especially quite important, is what is the source document that we need to use for the creditors journal? Like for example in the CPJ, it is the duplicate receipt. But in this instance, it's the original credit invoice, also known as the original invoice. And the only way I can explain this to you guys is, you know when you've gone to with your parents or someone to a retailer or something, and this is like the old retailers and stuff, they print a paper for you, and then the paper has such like things that you can pull off on the side. So usually there's like two pieces to the paper, right? So they print it and they pull off the sides and they give you one of the papers. And this is the original credit invoice, but you can also refer to it as the original invoice. That concludes the first lesson of the basics of the creditors journal and creditors purchases. I hope you guys have a bit more of an understanding now of what the creditor's journal is, what a creditor is, and what the process is with regards to when we purchase on credit. Your next task is to go and do the quiz after this lesson and to see if you can try and get 80%, 90% in it. If you don't get that, please come and rewatch this video. If you don't want to watch the whole video, there will be notes under the video that you guys can go and read through and just get a few points. In our next lesson, we'll be looking at the creditor's journal and I'll be explaining the format of it, how it works, all of that type of stuff. So see you guys in the next lesson.